Hi everyone, welcome to our third interview, the third video in 2022. And as you know, probably you have seen our previous videos. Every week I bring a prince or princess to these videos, to these interviews. And mostly these interviews, like this series of interviews, is about something related to real estate. Maybe in the future we have interviews with other businesses, but for now our focus is on real estate. And these video series are brought to you by dGroup and Keller Williams Preferred Realty. If you have any question, you can ask me, you can email me. I will provide you the email address. Full disclosure that I or my group don't have any financial interest or any financial relation with any of these businesses that we interview or the people from those businesses, from those companies that we interview. So please feel free to reach out to any of us regarding any question you have. This time, again, like the previous video is about mortgage loan. However, this time is about building and rebuilding credit if there is something wrong with your credit or you have some issues. So on this interview, on this video, I have Chrissy Schmidt from American Pacific Mortgage, and I'm gonna have her to introduce herself, and after that I'm gonna ask her the questions that you asked about credit repair and credit building and how these factors affect your mortgage loan. Chrissy, please go ahead.
Oh, thanks, Delon. Yes, my name is Chrissy Schmidt with American Pacific Mortgage. I've been a residential lender here in Colorado for, a little bit over 25 years. So thanks so much for having me today, Delon. I appreciate it.
Thank you for your time. Thank you for coming. So, Chrissy, the first time that when a client come to you and ask for a mortgage loan, what do you do? What is important to you, and how do you start the process? What you ask them regarding credit and the other factors?
Okay. Well, the first thing is it's kind of all about the client, the potential client's personal goals. Home ownership is, a very important part of, your financial picture, but we want to start with asking what their goals are. It's important not only to get someone qualified or pre-qualified for a loan, but we want to be sure that we know what like a max payment they might be comfortable with, what kind of assets they have. So it's really a little bit of a fact-finding mission initially to make sure that the client, that we know what the client is, their main goals are for finding their dream home.
So the first thing you ask them about the credit, or you pull the credit? What do you do?
Well, after I find out kind of their personal goals, and we discuss that the next biggest step is reviewing credit for sure.
All right. And what kind of credit score the lenders are looking for? I know there are different types of loans, and probably depends on the type of loan. You are looking for a specific credit score?
Yeah, there's, we have many different programs out there. Conventional loans, for instance, they require a minimum of a 620. We have FHA, VA, USDA loans, they all require a 580. And then we have many jumbo and specialty programs that usually start with a 680 requirement.
So what are the important factors that affect the credit score? And so people should be aware of those factors.
Right. Well, of course, the number one thing, first and foremost, is making your payments on time. Other things that come into play that can negatively affect credit are bankruptcies, judgments, collections, anything that's kind of a derogatory. That's kind of the stuff that most people would expect, but another item that I think a lot of people aren't really aware of is what you would call debt load. So, for instance, it used to kind of be if you had a number of credit cards, as long as you made them all the payments on time, it really didn't hurt you. But in recent years, they've kind of changed that, what if you want to call it, algorithm a little bit, and that if you have 3 or 4 credit cards and they're all maxed out, meaning that your available credit line is, say, $10,000 and you owe $10,000, that can now negatively affect you. So when I'm talking to clients, a lot of times I tell them it's good to kind of try and keep your balance on your credit card 50% or lower than the available line on that card.
Oh, okay.
And then, of course, the other smaller things that affect you is multiple inquiries, a few things like that.
Very good. So now you know what you should look for and what factors are affecting your credit score. So be careful with that. So if someone has a credit issue, a credit damage or low credit score, how this person or sometimes a couple apply together, how they can improve the credit score, what should they do?
Okay. Well, if we have some derogatories, one of the first things I do when somebody's looking for a home is we can actually, if they're 4 to 6 months out at looking, we can actually start with a soft pull credit report, which kind of helps us just find out where the client is. I mean, besides those minimum credit score requirements that we have, also a higher score leads to a lower interest rate. So I always want to help my client in any way, if it's build credit, remove derogatories, etc. So we do have an option where we can pull credit and then run what's kind of a credit wizard. And this is it's basically an option we have to tell our system, hey, we need our client to have a 680 score. How do we get there? So the system will tell us, like, pay down credit balances. The other things we can do too is get them hooked up with the credit repair company, which can help you dispute stuff, settle with creditors, maybe even for less than what you owe. There's a lot of things that can go into it, and it's really important to talk to a professional, because I have had clients that are like, oh, I have, a couple of collections, but if you have collections that are very old and have not reported in the past year, sometimes, believe it or not, it's not the best practice to just pay them, because now you're paying them, but you're updating also that the reporting date, so it can actually sometimes hurt your score by paying off old derogatories. So a couple of things like that you want to look at by talking to your professionals.
That is very interesting. I didn't know about that.
Yeah, most people just like, oh, I'm going to go pay it all off. But again, if it hasn't reported for like 2 years and then you pay it off, all of a sudden that derogatory is now fresh. And in the algorithm of calculating a FICO score, all of a sudden it's kind of like a new late payment, sort of, and can actually drop your score.
So what should they do in this kind of case? Like
sometimes you don't want to pay them collections off at all.
Okay.
If they're older, sometimes you just want to leave them alone, especially sometimes medical collections, especially. Of course, a medical collection does affect your credit score in a negative way, but lenders don't look at them as harshly because, they're just a lot of medical collections come up, and most of the time it's not the client's fault.
Oh, okay.
But yeah, it's all about the reporting date. So that's why it's important to even start with a soft pull with your mortgage professional, and they can give you direction on what makes sense to pay off and what you shouldn't pay off.
So that's why I tell many of my clients or potential clients, when they are not client yet, but they ask questions, and I say, go talk to a mortgage officer, talk to a loan officer, someone who is specialist in this case, because they know what to do. And some people, they are afraid. They're like, oh no. I'm like, listen, the mortgage officer, the loan officer from a mortgage company is not IRS employee. She or he is your guidance to guide you through this process, to rebuild the credit. And that's why I tell you, but many of you probably watching this video, probably you've heard this from me, that go talk to a specialist. Go talk to Chrissy or someone else, whoever you prefer, from a mortgage company. Someone who is specialist, really specialist, because it is like medicine. if you have a problem with brain doctor, when I was practicing still medicine, you came to me as a brain doctor, not a general practitioner or someone who's specialist in orthopedics. And for mortgage, for loans, is very important to talk to a specialist who knows what she or he is talking about.
Yeah, thanks, Delanya. Like I said before, I think it's even advisable if someone is thinking about purchasing in 6 months to talk to a mortgage professional. We, at my company, at American Pacific Mortgage, I like to at least get my client to do a soft pull, especially if they're concerned about their score. A soft pull doesn't show up as a hard inquiry, but yet it gives us enough information to guide them, because we want to give them the best interest rate we can as well. And to do that, the higher the score is, the better for them, of course.
Right, right. So now you learned your lesson what to do, okay? And there is a question from younger generations or people who are new in this country. How they can build a credit, and what should they do?
Okay.
Is it all about like having a credit card, or they can build credit otherwise also?
Yeah, actually, I've ran into a client recently that came here from another country, and he had really good credit, and he had 3 or 4 credit cards, and unfortunately his wife didn't have any credit. So a really quick and easy way to assist her was he just added her to his credit cards as an authorized user. Mm-hmm. And within 2 weeks, she had an 800 score just as he did.
Nice.
So if you have, young people, sometimes I ask them if they have a parent that has a credit card that they've had for a long time that's in good standing, if they can be added to that card, which is very easy to do by just calling the creditor. That can help them establish a credit score, and it typically happens very quickly within a couple of weeks.
Okay, and the same thing for young people, because nowadays actually many young people they wanna own a real estate, mm-hmm. At least a condo or like a townhouse or something like that.
Yeah.
And they are asking these questions.
Yeah, that's why I said it's kind of good to go to your parents who usually have established credit and they mm-hmm. can be added. Mm-hmm. And typically, credit card companies, typically if you're adding an authorized user, to them, it's, that's really someone else that they could go after if the card's not paid. So they usually don't have any problems allowing you to add someone to a card.
Okay, nice.
Yeah, that's a quick and easy way to establish for sure.
Okay, yeah, that's very good. Actually, I like the young generation nowadays. They are moving more toward investment, mm-hmm. and one of the largest, maybe the largest in some people's life investment is investing in real estate. So it's very important. Actually, in next 2 weeks, I'm gonna have an interview with a young guy who's like 31 or 32, early 30s, and he's a millionaire. And he has multiple properties. So I'm gonna bring him on this video series to ask him what he did, that now he is millionaire, and he's in a good shape financially and family-wise and everything. And I'm so proud of this young guy. And
yeah, I can't wait to see that video. That's exciting. Yeah. I'm curious what he did too.
Yeah. So if you have anything else to explain to our clients or potential clients, the viewer of this video, go ahead, please. If not, we can
concerning
close
credit. Yeah. Like I said, I think it's important, reach out to your mortgage professional. Myself, I think a lot of lenders offer the soft pull now, and you're just kind of preparing and doing your homework. If you do that, a good, even if it's 6 months before you're serious about purchasing, because then it gives you time to clean up some credit. Believe it or not, they say statistically that credit reports, 80% of them have some type of error. So that gives you time to fix those things and help improve your score, which again helps you qualify for more programs, different programs, better programs. And again, the higher the score, the better the interest rate.
Yes. So I think it's good for everyone to pull their credit from one of the credit bureaus.
Oh yeah, just to, if you're watching your credit, yeah.
Yeah.
So a lot of people use, Credit Karma, which is a free service. They do pull like a single bureau in file, which is a little bit different of a scoring system than our tri-merge residential credit report, but it's still a great tool for people just to watch their credit, make sure there's nothing fraudulent going on.
Okay.
And if they do happen to miss something, they catch it quickly, One time I, applied for a credit card because I was shopping, and then they put in my address wrong and I never got the bill, and then all of a sudden I found I had this late, but I had monitored it through
Yes.
Credit Karma. Another thing is, if you have a credit card, a lot of different credit cards will provide you a credit score
Yes.
each month, and it's like comes in an email. It tells you where your score is at, and so if you saw it drop drastically, that would at least be a trigger to tell you that maybe there's something fraudulent going on, or maybe you just accidentally missed something, and you can get it cleaned up. The sooner the better,
That's true. Actually, I had a client a couple of years ago, and she went under contract. Everything was going smoothly, and all of a sudden, something appear on her credit report. It was an emergency room or urgent care bill that was only like $300, but it was reported right before the final approval. So it's very important actually to monitor your credit score and see what's going on. However, that credit score you are getting is a little bit different, as Chrissy said, because you are pulling from like 3 credit bureaus, right?
Yeah, it's called a tri-merge residential credit
Okay.
report, which is different than your credit card pulls. It's different than even auto companies pull. But these other options, still a good way to watch your credit. And I'm glad you brought that up too, because even once you're fully approved and you're about to close on your home, every lender pulls what we call another soft pull 72 hours before closing, just to make sure that you didn't take out new debt, and a late payment could pop up and cause problems. So
Yes.
it's always good to monitor your own credit through a credit card, Credit Karma, something like that.
Very good. Thank you so much.
You're welcome.
So, ladies and gentlemen, now you know what should you do about your credit and what are the important factors on your credit score. So please go ahead. If you have any other question regarding credit or regarding mortgage or regarding anything related to real estate, please go ahead, email me at dylan@kw.com or email Christy. Or you can follow us on our social media also. I'm gonna put our social media also on this video and the links, so you can reach out and get your questions answered by specialists like Christy. Thanks so much for watching, and see you on the next video.
Thanks, Dylan.
Thank you.